It's getting really interesting, really, really fast. And when you see premiums on Silver Eagle shoot up by $1 in 1 or 2 days, I mean, that's never things that you see. You never see that type of movement unless all of a sudden you're seeing product disappear.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today is our president, Andy Schectman. Andy, thank you so much for joining us today.
Good evening, Elijah. Good to be here. Thanks for dropping in.
Definitely. The first topic I'd like to discuss is the precious metal markets. This week we've saw a little bit of a rally, especially in silver, with silver now topping again 27. What is your take?
Well, there's a lot of talk of the short squeeze, the online Reddit group that is going after silver, realizing that it is massively short, just like they did with GameStop. It's exciting. It's intriguing. And look, you had 30 million ounces deposited into SLV on Friday, I believe. And when you talk about just how big that really is, you're talking about an annual mining supply of 800 million ounces. If you were to see that kind of sustained acquisition and purchasing for a few weeks, you overrun the short squeeze. You overrun the banks that are massively short. And, I don't know that we'll continue to see that type of action, but when you see a stock like GameStop go from like $20 a share to 500, you can only imagine what silver would do if indeed you see massive buying across the board. I'll tell you that all of a sudden premiums have shot up like I've been talking about for a while. I've been saying a common phrase that the market would identify itself by an inability to source product. Look, the mints of the world are models of inefficiency, and the business is just in time. And if you don't stock inventory, getting product once you sold out, and before you sold out, maybe it was flush, and then all of a sudden, boom, it's not. And you're seeing a massive rush to buy silver, a massive rush, like a panic rush, kind of like we saw in March of last year when COVID started to really accentuate itself. And so I will tell you that from the top on down, from what's going into SLV to what's happening here on the physical side, it's getting really interesting, really, really fast. And when you see premiums on Silver Eagle shoot up by $1 in 1 or 2 days, I mean, that's never things that you see. You never see that type of movement unless all of a sudden you're seeing product disappear. And I think that's what we're seeing. There's a massive increase in demand and an awakening from a whole group of people that have never purchased metals before and are realizing that, hey, it might actually just be the Achilles heel of these big banks, that these naked short positions that they've been able to push the market around with for such an extended period of time is becoming more and more difficult. Now, it started, Elijah, earlier last year with the massive amount of deliveries we saw off of COMEX. Over 320 million ounces were delivered off of COMEX to this group we've talked about all year called the Others, the sovereign wealth funds and the family offices. And now we're seeing it a step further into the physical realm. This is the beginning of a product crunch, whether you're talking COMEX bars all the way down to physical retail. It's happening. And look, it's a very thin market. It doesn't take much of this type of rhetoric, this type of action, this type of noticeability for very quickly there to be nothing left. And I say that to you with 100% sincerity. For those of you that have been listening to me on this channel or others, I've said the same thing for the last couple of months. The market will identify itself by an inability to source product. I've seen it for the last 30 years when times were normal, and now these are anything but normal, and you have interest from groups of people that have never been interested in precious metals. And as Rick Rule has often said, prior to 2020, the complete and total allocation of precious metals across the whole financial matrix was 0.5%, with the average over the last 40 years being 2.5%, and just a regression to the mean of 2.5%, as averages tend to regress to the mean, would be a 5-fold increase in a market that couldn't hold a 2-fold increase. And think of what 2.5% really means. That means $25,000 per million. That's not a lot to have allocated to precious metals. And if we see that type of drive towards precious metals, which not only represent a hell of a value right now, but in times of great uncertainty, I think people are awakening to the uncertainty and instability of the dollar and the dollar markets. And for the first time, you're seeing an expansion into the mainstream, into the awakening, rather, of precious metals. So I'm very concerned, cautiously concerned about availability moving forward. So I think this is just the tip of the iceberg, what we're seeing right now.
Now, with respect to that, the ability to source product, what is Miles Franklin doing in preparation for that? Is there anything really we can do to, guarantee that we have product in the future?
I will say proudly that I believe for the last year we have had the best hands-on approach to acquiring supply ahead of this. And I've talked about that at length also. I said in March how I owed a debt of gratitude to Chris Martinson from Peak Prosperity, the epidemiologist who alerted me to COVID. And I went really deep into my line of credit and bought up everything that wasn't nailed down. And I have continued to do so, maxed out my line of credit on every single level to continue to have product in stock. And I will tell you that we still have a bunch of product and a bunch on the way. And so we can only do what we can do, but I'll tell you, it's a full-time job nowadays to make sure that we have product. And I will proudly say that we have as good of a selection right now as anyone in the country, probably better. But look, it's tenuous when we run out of product. If someone calls and spends, $10 million on silver, all of a sudden what was flush isn't any longer. And it's not so much now, it's about restocking. So I bought as much of the allocation of the 2021 UK Britannia as anyone in the country, maybe, 80,000 or so coins. And I'm continuing to order as much as I can, stock as much as I can ahead of what I see coming as a run on physical silver. And I've been saying that now for the better part of 6-8 months. So I've been buying my own rhetoric, and I have been stocking up, putting my money where my mouth is so that I am able to deliver product when people want it. And it's an interesting time, Elijah, where we have more business than we know what to do with. And I'm just afraid that we'll have more business than we have product able to deliver at some point if it continues.
No, it is an interesting situation because I know you've talked about many times in the past where in these kinds of circumstances, what people should be concerned about is return of your wealth, not return on your wealth. And that's kind of the most fundamental reason to invest in precious metals is it's an insurance against crisis. And we've definitely seen a lot of that this last year and just continued uncertainty. I guess if you could speak a bit about that, because you mentioned how price doesn't matter. If you're buying for the first time, price doesn't matter because the important thing is to have that bit of insurance before it's too late.
Yeah, and I don't want to sound trite or callous. I mean, obviously, price does matter, but it doesn't matter if you don't have any. What's it worth if you don't have any? And so that's why developing a core position is priority number one. Once you've done so, then buying on the dips and accumulating when you're able to is always sound advice. And in any bull market, there are pullbacks. And, there's the old saying, the bull wants to throw off as many people as possible and not take them along for the ride, a bucking bull. Well, you have to hang on. And then there are opportunities to purchase within a secular bull market on the pullbacks without chasing all of the rallies. But if you don't have a physical position in hand, that's not a luxury you should be trying to achieve because, look at GameStop as a prime example. Now, one of these days you could see that. The fundamentals in silver are fantastic on every single metric. They are just fantastic. And you're right. Look, silver is about return of your money, but I think what's attractive about silver to most people right now is the realization that not only is that true, but that the potential return on your money in silver is extraordinary and not something we typically focus on, endorse, or recommend buying silver for. But I would be lying if I said I wasn't keenly aware of it. And when you see, an asset class price 50% of its all-time high, well, it's popped up to 27 here, so it's a little above. But from 1980, I mean, that's crazy. And when you see an asset class that is so needed in so many ways, running continual deficits, coming out of the ground at 8-1, yet valued at north of 70-1, and all of the the new administration's plans towards a green future and green agenda, on top of the fact that you have silver as a depleted asset running continual deficits in mine supply, 300 plus million ounces last year with half of the industrials shut down. What happens when the industrials come back online? And the one thing that not enough people are talking about is the Chinese Belt Road and Rail Initiative. I mean, this is about as big of a silver-friendly endeavor as can be. It is the largest infrastructure project in human history, connecting 65% of the world's population, 40% of the GDP. It's not just with bridges, roads, and railways. It's also infrastructure, which is, the need for silver connecting infrastructure is extraordinary. And it should not be understated. So, you put it all together and then look at how the big money is taking delivery off of the COMEX. It all becomes, to me, very illuminating and also encouraging that you could see those types of massive profits. And then you throw in a 3 million, people strong group, chat board group on Reddit that is focused on accumulating silver. These people are outside of the hard asset people that are now waking up to, hey, there's really blood in the water in silver. You're adding fuel to what is potentially a 5-alarm fire. So I will tell you this, Elijah, I've never bought gold and silver to become wealthy. I bought it because it's wealth. But I will tell you that the fundamentals for silver are extraordinary. And on every side, supply, demand, potential uses, needs, the difficulty in mining it, the cost in mining it. I mean, everything about it, and the movements of the biggest players in the world scream that this is buying an opportunity of a generation. And I mean that to my core, to my soul.
I think that's a really good point. I mean, it's pretty cool that you can buy something that the most fundamental reason to buy it is for insurance. It's like buying insurance, but there's a possibility of a high return on that. I mean, you don't see that too often. But I wanted to ask you about what we saw this week with respect to the Federal Reserve announcement and also the stock market. The Fed said that they will continue accommodative monetary policy until they see inflation above 2% and maximum employment. So that announcement made the stock market fall, and now the Dow is below 30,000. I'm not really understanding it. It seems like this is incredibly dovish action on the Fed part. They're creating essentially $120 billion per month. I remember back in 2012 talking about, they're creating $85 billion a month. This is $120 billion a month, and the stock market falls. I just don't understand that.
So much of the market reaction these days is counterintuitive. You could argue that a lot of this stuff is priced into the market, but you reach a point of, the law of diminishing returns comes into play where at some point people have to realize that this is just a very dangerous game. My 18, 17-year-old daughter just said to me, can you open up an account on Robinhood for me? My boyfriend's been doing it. And I looked at my wife and said, well, if that isn't the top of the market, I don't know what is. I guess the bottom line is, Elijah, that people are waking up, I think, to the fact that this is a rigged game, and that I don't care how bullish you are on equities, you have to take a step back, and your brain and your eyes have to be disconnected. When a market, which is supposed to be reactionary to the economy, is at all-time highs, yet the economy arguably is at all-time lows, depressionary lows when you factor in, unemployment. It doesn't make sense. And I think, you have a whole bunch of people who are using the opportunity of the most overvalued market in the world, in history, to bail when you see a new administration coming online that's going to raise capital gains taxes and stock transfer taxes and corporate taxes. Wall Street's going to take it on the chin. And so, the big money always sells ahead of everybody else. And they're using, I would argue, dovish and bullish sentiment and rhetoric to sell. And they should, if they're smart. Profit is not a four-letter word. And to see a market that is irrational, as this one is, behave the way it has against the backdrop of an economy that does not justify it, I think people are waking up to it. These are the same people that are waking up to precious metals. And, the law of diminishing returns comes into play. You can only create an illusionary environment for so long before people wake up to it and say, geez, this has got to be risky. And the Fed, at that rate, look, it took 300 years to create $800 billion in wealth. And at that rate, in 5 months, they will have created as much money as the United States took 300 years to create in wealth. A trillion seconds ago was 31,688 years ago. They are destroying the currency. So when these people, maybe they're realizing the fact that they're looking at their balance sheets and maybe they're realizing that it is reflective of a currency that is being destroyed. So taking some profit, getting out before there is a collapse, getting out before it becomes mass realization. And maybe it was what happened with GameStop, realizing that this is a game that is being controlled by hedge funds mostly, and not fundamentals. So I think there's just, here again, an awakening of people that your eyes and your gut are telling you two different things.
As you mentioned, this situation, it doesn't seem like it can end well. It seems like if we go back to 2008 and look at where the Fed balance sheet has gone since then, it's pretty much just went up. There was a period of about a year and a half in 2018-19 where it got reduced by about $700 billion. But at $7 trillion today, it's not like they can rein that in. The situations are they have to print more money to keep the stock market up, or if they stop, the stock market collapses. I'm open to other viewpoints, and I'm totally open. Maybe in the comments, people explain to us like how this can end well. I just don't see that.
It can't. Imagine if the Fed just stopped accommodating, just stopped stimulating. Everything would collapse if there was no Fed intervention. Free markets are supposed to have both periods of cleansing, not just euphoria. To not let it cleanse itself only coils that spring much, much, much harder. And it won't end well, and it can't end well. And it has created an illusionary environment where the Fed is picking winners, basically. And because, all the quantitative easing that they're doing is not being sent out into the real economy. The QE that the Fed continues to do by creating money is used to buy the back end of the bond market, which, they go to the banks and they buy the bonds, which lowers interest rates and stabilizes the bond market. Well, that keeps everyone's home prices, the interest rates low. People can go out and buy homes and keeps the home values high and the 401ks high. Because, if interest rates are non-existent, people won't be in fixed income. So they speculate not only in equities, but in real estate. And so you see what appears to be a strong economy and a strong market. It's all illusionary. And the problem is that the only people that are benefiting from the QE are the banks and the hedge funds, because the banks get the money from the Fed. When the Fed buys the bonds, the banks then have to lend it into existence. If they don't lend it to the public, which then is how money is created and creates inflation and velocity, instead they're leaving it at the Fed in a reserve account, earning 80 basis points. They don't care. It's with safety. They're not lending it out into the real world that has suffered so badly with bankruptcies and foreclosures and people hanging on by a thread. And so the Fed is borrowing that money, lending that money rather, to people who don't need it, like hedge funds who have pristine balance sheets, who borrow the money at next to nothing, buy equities, jack up the prices, and pay it back and make a fortune. And so you have, the rich getting richer and the poor getting poorer. The people who need the money aren't getting it. The people who don't need the money are getting it. And that's why you're seeing this massive separation. And when you look at 130,000 small businesses gone and probably never coming back, you have all these small and medium-sized businesses, which represent about 40% of GDP, that are gone. And now it's just the big companies, the Walmarts and the Amazons and the Home Depots, and the little guy is dead and buried. They're not getting the loans. They're not getting the stimulus, not enough to make a difference. And so, it comes to a point where it will end badly. To believe that you need government intervention on a constant basis in order to keep markets healthy is really a big problem. It's like giving someone continual shots of heroin to feel good. Well, what happens when you pull the needle away? You go through withdrawals, bad ones. And that will happen. There will come a cleansing process. Mother Nature will get her way. And the longer they do this, the more severe it becomes. And as the economy becomes worse and worse and worse, and as more and more companies fail, small and medium size, that are reliant now upon the government, you create a situation that, you have more and more people living off the government dole that will continue to expect stimulus checks, or they'll revolt, or there's a big problem. Things collapse. Interest rates skyrocket. You see the greatest depression of all. And, when you take a step back and realize that this Chinese Belt Road and Rail Initiative, Elijah, is being funded with or paid for, or the payments will be in the Chinese digital yuan, that's sowing the seeds for a major competition in world reserve between this new Chinese digital yuan and the dollar, because you're going to have 65% of the world's population transacting in a digital yuan. It may not happen overnight, but when they're building the infrastructure that we're not part of, it's very ominous. And this is why I think 2 years ago, I gave a speech at Sprott with a chart that JP Morgan Private Wealth produced to their wealthiest depositors. That is the division of JP that works with the centimillionaires and the billionaires. And in that chart, it showed all the world reserve currencies going back to the 1400s. All of them had a 40 to 50-year lifespan. When you realize that Nixon closed the gold window in 71, we're living on borrowed time right now. That chart said to these depositors, the very, very wealthy, that we want you, and I put this up on the screen during my speech, and it said, we want you to mitigate your exposure to the U.S. dollar, because we do believe over time the dollar will be challenged for singular world reserve currency status. Well, there's your challenger. You got the new Chinese digital yuan that will be usurping the dollar for settlement, because everything that they are going to be doing with these countries will be settled in the digital yuan. And so it's sowing the seeds for the end of world supremacy for the U.S. dollar. All of these things are little pieces that you have to see. You got to see ahead, not look what's right in front of you, but what's out into the future. And if you look at what the big money is doing, since 2017, they've been repositioning, slowly exiting the dollar, accumulating hard assets, and, in preparation for a change, whether it be the Great Reset or challenge to the dollar as singular world reserve currency. These things are coming. This is why you mitigate your exposure to the dollar with gold and silver. It is wealth outside the system and outside the trouble that is coming. And when you see the most sophisticated, well-funded, well-informed traders on the globe make these moves, reclassify gold, massively accumulated by the central banks, the sovereign wealth funds and family offices pull it off of COMEX. These are all glimmers of what is coming. And so that's why we do this, Elijah, not to get wealthy. But yeah, silver offers that potential. It really does. But that's a bonus. It's more along the lines of getting out of harm's way before that train comes barreling down on you. And I think it will happen. you can see it by the pieces that are slowly being put into place.
Definitely. And I kind of thought of like, yeah, if things do go worst case scenario, you still want to be able to provide for your family. You still want to be able to, survive this coming storm. So yeah, it's one of the things that kind of, with everything happening at the Fed and everything that you mentioned with respect to, in a lot of ways, the wealthy moving into precious metals, it seems like in your gut that something is changing. You've said this. Now, I wanted to ask this one viewer's question before we end. I'm not sure about if there's any plans for this, but Jeff is wanting to know, when is the Trust Your Gut silver bar coming out?
It's a good idea. Something, I believe in trusting your gut. I've used that phrase a lot. I think most of us go through life in some fashion or another saying, darn it, I knew I should have done that. Could be about relationships, business decisions, personal decisions, whatever. I think most people don't trust their gut, and it's a great idea. I really think I should make that. So thank you to the listener. I think that most of us are blessed with good intuition, and we know it. Like I said, it's the first reaction. I've lived in Minnesota my whole life, and I'm in Florida right now. I'm going to be moving out of Minnesota. Just purchased a home in Florida, and we'll be leaving the great state of Minnesota pretty soon. But in driving on a slippery road, an icy road, when your car starts to slide, it's your first reaction, your gut, that always is the right reaction, always. I'll say that from experience. If you hesitate and wait, you'll say, darn it, I knew I should have done that, or shouldn't have done that, whichever the case may be. But yeah, I think you need to trust your gut, Elijah. I think it's really important that when things get dicey, your gut speaks to you, your inner voice speaks to you. But we've all become so busy and distracted that we don't listen to it enough. Listen to your inner voice. And, I sell gold and silver, and that's why I don't talk about people getting wealthy buying it. It's wealth. And that's what my gut tells me, is that no matter what happens, and something's going to happen, gold and silver have a 5,000-year track record of maintaining wealth. And I don't think that's going to change tomorrow. And when you realize that the world is moving to a digital matrix where, pretty soon we'll have a digital Fed coin, and when you play poker with your buddies and you win $50, you get paid from your buddies in Fed coin that goes on a ledger. I mean, anonymity is gone in that environment. Having something with a history, a track record of maintaining wealth all the way back to biblical times, outside that matrix, to me is a gift. And if you're able to make some money along the way, great. If not, you'll be damn glad you have it when you need it, and hopefully you don't, and you pass it on to your children, and be assured that in the year 3000, when your great grandchildren are using it, it'll still have value. That that the dollar bills in our wallet now will have been hanging for decades in a frame at the Smithsonian. So. Yeah, trust your gut. It's a good idea. I'd like to get a round or a bar made that way, and it's a good thing for people to think about. Trust your gut, listen to your inner voice, and be a leader. Don't be a follower. Unconventional times call for unconventional actions, and while it seems really normal and conventional to me, it's not. Mainstream has driven away from hard assets and want you to believe that the road to retirement is only paved with mutual funds and stock certificates. And I would submit it's not. It has been. Everything is a cycle, and cycles that go up come down too. And those that move up in such an extraordinary fashion, counterintuitively on so many levels, will come down in spectacular fashion as well.
All right. Well, Andy Schectman, thank you so much for joining us today. If people would like to give us a call, they can call us at 1-800-822-8080 or email us at info@milesfranklin.com. Before we let you go, Andy, any last thoughts you had?
Yeah, well, I think just buckle up. It's going to be an interesting year. And I think this is the time for those out there that have done really well in crypto or done really well in stock, not a bad time to not only pull some chips off the table in physical metal, but also in cash. I know that's counterintuitive to what people are talking about, the destruction of the dollar and inflation, and it's coming. But, cash does give you that courage and the tools to take advantage of these great distortions and inequities. It also gives you peace of mind, that you took stuff off the table. You have some cash. You can weather a storm. And I think there's a storm coming on many levels. So having cash, having metals, minimizing your exposure to risky speculative plays right now is probably good, because, we forget the banks issued bail-in legislation. The money markets issued gating legislation, meaning if the money markets start to turn upside down, you're gated, you can't leave. And you can see what like Robinhood did today or yesterday, not allowing people access or to go long on First Majestic. You only buy one share. They're changing the rules in midstream to suit the elite, and the elite will always win. So get out in front of this, and don't be a casualty in this. So give us a call if anyone would like to talk to me personally. Send an email to info@Miles Franklin, address it to me, or give a call, 1-800-822-8080. Elijah, I really enjoy our time together, and I think these are very, very important conversations that, if I had to guess, will become more and more important as 2021 rolls along. So thanks for your time and your efforts and getting the word out, and thanks for all you listeners for listening and giving us a chance.
All right. Once again, Andy, thank you so much for your time.
Thank you, Elijah. Take care, buddy. Stay well.